So thank you, Kitch and Casper, for accepting our invite to be part of our pilot episode of LenderLink Lounge. I'm Elaine. I'm from LenderLink and I work in marketing. And this is my colleague, Red.
Hi, good day to both Kitch and Casper here and to our listeners. So my name is Red. I am part of the biz dev team of LenderLink, and I'm really excited to speak to all of you guys today because Elaine, I think today we'll be uncovering a lot of truths, not really drilling down on the business side of things, but also we wanted to know insights coming from stakeholders who are participants in the ecosystem of financial institutions, particularly in the data provider sector and as well as in actually those who are providing financial services like lending.
Absolutely. Yeah. And I'm also very curious to understand like what really goes on in the life of somebody working in the credit provider and also in the data provider side of things. Although, of course, with the data provider side of things, I have an idea. But yeah, let's give the floor to Casper and Cage. I give the floor to you to introduce yourself.
So, hello everyone. I'm Krizelle Lazatin, but most people in the Philippines in the fintech industry would probably know me as Kitch. I've been a B2B sales executive for the last 15 years with a focus on the Philippine fintech space since 2017. I was previously connected with and have worked for some of the country's top credit bureaus and the pioneering open finance startup in the Philippines. So basically focused on helping financial institutions such as banks, digital lenders or lenders, traditional lenders, as well as data aggregators, really build stronger partnerships and a more connected digital ecosystem. I recently began working as an independent consultant mid this year while navigating a new chapter abroad, but I continue to share my experiences and insights from my years in fintech.
All right.
Thank you.
And it's quite exciting to talk to you guys and also Kitch here. It's just to give you a very brief introduction. So my name is Kasper Svendsen. I'm originally from Denmark, but based in between Singapore and Manila, where we have all our operation. So I'm the CEO and co-founder of Datong. And for you Tagalog native speakers, you would know that Datong is slang for money in the Filipino language. And we are basically trying to do microfinance, but in a quite different way. Microfinance has been around for centuries now, and still yet in Southeast Asia, 42 million small business owners unfortunately cannot get access to the credit and access to fair finance, and the banks cannot really help them, and therefore they are relying quite heavily, unfortunately, on loan sharks and alternative lenders. So that's basically where we come in. Basically, Datong we consist of two pillars. One pillar is our focus on deep tech, where we use AI to really create this holistic profile on small businesses who don't have all the traditional documents needed for a bank loan. And then on the other pillar, we rely heavily on psychology and sociology, where we basically put these small business owners in groups with similar businesses in a similar area, where they're basically accountable and helping each other out. So we really play around with a lot of tech and a lot of psychology as well. And so far, it's been proving to be quite successful.
I think it's very, very much aligned also to what LenderLink is trying to do to basically improve inclusion. There in the Philippines, there's just so many people that don't have bank accounts and they lose out because some can actually pay. It's just that, circumstances. Okay, cool. So before we interview you and ask you questions about the solutions, how your day is, we want to give you scenarios and we want to hear if you're going to approve or deny them. But if you approve them, I would ask you to say you will swipe right. And if you would deny them, I'd ask you to say you would swipe left with it. You can explain. You don't have to explain if you don't feel to. And you can also challenge each other's answers. So one at a time. First, I will ask you, Casper. And then for the next one, Red can ask the next scenario for Kitch. I will start.
Right.
So for Casper. So the first one is a loan applicant with no history, but perfect payment record on utilities. Swipe right or left?
Well, you want the good answer, or you want the correct answer?
I want your answer. There's no right or wrong, honestly.
The answer is that of course I would like to approve the loan. I mean, we're in the risk mitigation space, and I need some more data. There's nothing more than I would literally just love to swipe right and approve the loan, but there's just a little bit too much data missing here, right? But it's one of those things that if the person is having a clean store, and a large amount of customer traffic. They might not necessarily have the good documentations and so forth, but at least they're having revenue and can prove the revenue. But in the early days of Datum, we would probably have approved and kept that thing going and see how they're going, because a lot of the times the customers don't have any credit history, but that doesn't mean that they're bad business owners per se. It's a very tricky question, and I cannot give you a clear answer to it. I need more data.
I see Kitch smiling, nodding, and having various reactions. I want to know, Kitch, your take on this question.
Yeah, I'm with Casper on this one. I understand what he means, that I would also love to swipe right, because there's a bit of data that allows me to consider what kind of payer, or what kind of repayments could happen if he does have that history, if that person has a history of payment utilities. But again, there are so many factors and dependencies that need to come into play for the risk. Full disclaimer, I'm also not in the risk space, right? Like, it's not my core expertise. But just from what I've encountered when working with clients and partners, probably if the loan ticket size is very minimal and it's a first loan, maybe, right, Casper? Maybe as an initial loan, as you mentioned, the earlier days, maybe you might approve it. But the more data that you could have access to or could be submitted, I think that could really help.
But it's one of those things where there's just so many more questions. So it's like, what's the money going to be used for?
Yeah.
What type of business is it? And at least in our business and in our operation, we get this quite often with small businesses coming in. They don't have any credit history. And if they do have credit history, it might be with informal lenders, and those are super, super difficult to verify. But let's say that they've had multiple loans with the 5, 6 lenders or loan sharks and all that, and they're all paid on time. Then technically, that's a good thing. It's just, since it's informal lending, there's not really any proof that we can use. So at least in our context, because we get this a lot. So what we do is we look into utility bills. So actually right now we use around 50 data points. Soon we are integrating 50 more. So we will have more than 100 data points that we look into when we do the credit assessment. But in some of these cases, there's just not much to be proven, right? So therefore we look into different metrics when we do the whole evaluation. And one of them is the utility bills. One of the tricky points about using utility bills in the Filipino market is that sometimes you have 5 houses or 5 stores that's actually sharing that electric bill.
Yeah.
Or water bill, and that can complicate things quite a lot. But it's just one of those things where we just need more data points, and just because you don't have, we can say, credit history or all the traditional data sets used by other financial institutions doesn't mean, again, it would be a bad client, because it's a very classic scenario.
All right. I think that's a good point. We're heading on to the second question, because there's a lot more that need to be argued upon. So number 2, I think this question is for Kitch. Swipe left or swipe right? An SME with incomplete financial statements but strong digital footprint.
Swipe left. I mean, if I were to, that's the short answer, right? But there are many, many layers that could come into play for this. And especially when it comes to the SMEs here, if they're new to the business or they don't really have historical information yet because they just started, then the existence of financial documents, especially with how we do the reconciliation or the periodic filing for a business or even for individuals here in the Philippines, it's really not their fault if their financial documents aren't there yet. And that's something that we've also seen in the SME space, where when micro SMEs, not the larger corporate versions, when they try to apply, it's also very difficult for them to get that loan because the lack of existing business documents. But I would lean towards swiping left, because I think there are more compelling data sources that can be used instead of a digital footprint, at least to be able to assess better. So maybe some business documents, some other verifiable information, like if it's a small business, a DTI certificate, or just something to legitimize the business, because the digital footprint, unless that also covers like the legitimacy, then maybe I might consider it, right? I might lean towards the move the spectrum a bit or move the cursor a bit towards the right. I would say it's a tricky question, but if I have to give a short answer, I would lean towards the swipe left.
I
Okay,
would.
clear. No problem.
I think I would swipe right cautiously, very carefully swipe to the right. Because if we can see some sort of sales patterns, again, if they have very strong digital footprint, that also means we must have some sort of verifiable data points here, right? Some metrics we can look into. So I would cautiously swipe right if we can see some sort of sales patterns, inventory movement, supplier or behavior like digitally, then that's often better than a messy spreadsheet or in a, let's say in a handwritten ledger. So I think it's one of those things. If it's verifiable, then it's easier to create some sort of credit assessment here. Maybe it's just in our context as well, right? Because we are kind of rewriting what credit worthiness means, and it's no longer just about balance sheet. It's more about what it's a bit more in the holistic way. What do we have that we can use to verify and look into this client, whether they are credit worthy or not? I'm just saying that if they do have a very strong digital footprint, then there might also be a high chance that we can actually verify a lot of the metrics points we would use to do the assessment.
Thank you. Thank you for that. I just have to say that they have two valid points wherein, like, probably companies in between would agree to each at a certain point. Like for Kitsch, I see how connecting the dots would get you to a certain verification output. Whereas with Kasper, he says that there are other approaches we can go to and be of a certain trajectory. It gets you to a point of verifying things could be internally what works best for a specific organization such as theirs, who are practically starting in the financial market here in the Philippines. Such a good point. So yeah.
Yes. Okay. So next question, Casper. Someone who applies for 5 loans in the same week.
Okay, so the same person applies for a loan 5 times. Like what that would tell me is probably that they must be very desperate for the money. So that would probably be a red flag. One of the things that we do, because like we are quite, I mean, we are a fintech startup and we rely heavily on technology. But back to my intro, we rely heavily on psychology and sociology as well. And there's one aspect we do when we do the disbursement of loans, because we can approve loans in like within 24 hours, right? And would also be able to disperse the money within 24 hours. It's something that we do not do, especially if a client is really pushy. Then we basically put them on the red flag, because if they're very, very desperate for the money, that probably tells us that they might have other loans that they need to pay, or they're in a very desperate situation. And if we have defaults because of that, then that means that our business is going to take a loss and we cannot help as many. So actually, we delay the disbursement of money on purpose to basically mitigate these types of situations. Because we've had clients that we approve for a loan, and then they're just too pushy. Then when can they get the money and so forth? Since we're operating in a country where access to reliable data, especially when it comes to lending data, is not very easy. There's not many options. There's not a centralized database such as in India or the FICOs in the US or a lot in Europe. We just don't have that here in the Philippines. So if a customer is pushing that hard 5 times, then we would probably not move forward at all, even though we have approved them. But these is a very, very strong red flag in the way we do business, for sure.
Yeah, I would also agree. There are other considerations that might come into play. We also could consider that sometimes if it's an emergency loan that the desperation might be from a legitimate reason and that they're trying to see what's the fastest one. But I think from just the general perspective, I agree with Casper that it would really signal a red flag from the get-go unless there's more information that's fed or like there's additional data that there's context to it that we could validate. But with just that information, then yes, it's definitely something that will park or will be on the low priority list for the risk assessment team.
But it also just a very quick add-on here. It also depends on what's the industry, what type of business. Most of our clients is the small sari stores, the small mom and pop shops. Well, let's say that you have a little bit more established company. We've had clients that were like quite pushy for us to disperse the money, and they have very good reason because they want to contract like a small local government tender from, let's say, a well-known mall chain or hospital chain as well. And they basically need the capital to start delivering on that, right? So we've had some clients where there was very valid reasons because they need to move forward to deliver on our order for a very big client. And them as a small business, it's life or death, right? So, but in most cases, I would say 90% plus, 90% plus of the time, it's a major red flag. Major red flag.
Makes sense. Brett, do you want to ask the next one?
Sure. This one goes to Kitch. Would you swipe left or right to a borrower with a dog or a pet named Credit?
Is there an option to skip? No. I think there's just not enough information for me to I mean, if I have to choose, then from a risk management perspective, with just that information, then I will put it on the left, like swipe on the left, just because swiping right causes more risk to me with very little information, right? So it's more on playing it on the conservative side. But again, I would put that into context because like if I'm a new lender and my priority right now is to really scale up and I have some, maybe the loan ticket size that this person who has a pet named Credit is trying to get, I don't know, pet food or something, and maybe it's 1,000, 2,000, then the risk is manageable, right? It's not ideal, but the risk might be manageable given the loan ticket size. So I might consider it, not because I think that person is credit worthy at this time, but I'm able to kind of park that as some, as a cost to scaling or like a cost to market growth.
Have to, I think it's one of those things where at least what we experienced in the early days of Datong as well. We don't do any marketing, we don't do any ads. We did initially, and with a very, very, very limited marketing and ad spend, we just received thousands of applicants, and it was just a little bit too much for what we could handle, and also because a lot of it would be quite related to some of the questions you're asking right now. I'm just saying some of the reasons why the potential clients would need the loan was, I would say, sometimes you could laugh about it. It's a very funny industry, and I think we can just leave it like that.
Cool. Okay, so maybe we can turn it down, Red, to the last two scenarios. I will give another one for Casper, and you give to Kitch. So Casper, are you gonna swipe or left to an applicant who has perfect credit, but 3 active loans already?
That would be a soft decline. And the reason why I say soft, it's again, it really depends on what type of loans. Let's say it's for some established bank loans and they have good credit history with the banks, then they probably would not go for a loan with us. The point is just if it's for a big financial institution and they have performed good, paid on time, and they're just about to end, then I think there's a good chance that, okay, they probably have the capacity to pay on a new loan as soon as they have ended the other ones. But let's say which at least in our case, we do tend to get quite a lot of these, but it's not from established banks. It's from alternative lenders, from loan sharks, and that's a straight up red flag from us. But let's say it's a mortgage, or you are paying for a car, and you have a business where your revenue and your earnings is justifiable for what they have applied for, then there might be a chance. Because like if you're having a mortgage, it might be on a 30-year term, meaning that would we always decline them? I think we would not, right? But then it also puts the client in a different perspective, because that means they probably have some collateral, even though it's going to be the bank having most of the collateral, but then maybe they will have other things.
I hear what Casper is saying. I think just maybe to add, if I were the one who was assessing that one, so perfect credit history, that's actually a green flag. Although I would pause at the 3 active loans and then consider also, like, from the loan application side, how much is he asking for in comparison to the 3 active loans. So the timing also matters. The size of the loan will always matter. And I think it also matters to understand why this particular entity, SME or individual, might be applying from another provider. So that could also come into play, kind of trying to understand the purpose of why they are, quote unquote, diversifying their loan applications. It's not necessarily wrong, but it's worth considering why they are exploring, because there are also institutions and borrowers that do shopping with a purpose, with intention, right? Like the loan shopping, as they call it, with a purpose. So there would be some considerations for sure on that one.
That's
Again,
too well
very
said.
insightful.
Yeah.
Because a lot of Gen Zs, well, let me speak generationally. Gen Zs would be intentional in terms of their purchases. Some would then be building credit history and performance. Others would then be purchasing just because of the needs. So very interesting topic, but this is quite intriguing for me because a lot of Filipinos are very creative in a sense. Would you swipe left or right to a small business applying for a loan using a Gmail address named moneyhustler88@gmail.com?
That's for
I
me.
know. I know, Kitch. This is for you.
The knee-jerk reaction would be like, wait, right? But again, if this borrower does have some information, or you pull the information on this particular borrower and you see that despite the unique username, he does have a very impressive credit behavior, and maybe in other alternative data sources, his record is actually coming up right. There's a chance that I would swipe right, because again, the email is a data point, and it's quite concerning, I would say. But like at this point, I think an email, that kind of, it's prejudicial, I guess, at some level, to just base it on the email address. Like I don't think the email address would be predictive enough for the repayment behavior. Maybe from Casper's thoughts, like, they also consider psychological behavior behind it. If I have the chance to speak to that borrower, maybe I would give, my 2 cents, like, hey, you might want to consider this, especially if you want to go into full formal lending. It might be funny. But I think from factors, or predictive factors, I wouldn't say it's a total deal breaker. It's a mini red flag, I think, from a personal preference. Again, if there are other data points available that show otherwise, then I would consolidate all of that and see how the risk assessment would come up.
I think it's one of those things that I haven't really thought too much about, but I definitely have to talk to my tech team about us looking into our clients' email addresses, because this sounds very shady. It might be a perfect and good client, because apparently that person knows how to hustle money, right? Or maybe not, I don't know. But I just took note. Let me double check with my tech team, because maybe we can do some linear regression models about how, if there's any correlation between scammy sounding email addresses and client behavior. And even if you have some clients with these emails, it's very interesting to dig into whether there's some sort of correlation. Because if you ask me straight up, I would have no idea. It sounds scammy. It sounds like a big red flag. If you just ask me on a personal level, I would probably say no. But at the end of the day, I don't know. I don't have any data to back that decision up. So it's just one of those things where it's something that I will try to look into, ask my tech team, and then maybe I can give you guys any interesting results based on our research on it.
I know, just for context, here in the Philippines, there was an era wherein Filipino people are very fond of Friendster. And then people were actually trying to create very creative user email IDs. And probably a lot of them are still using it up until this date. So shout out to our users or borrowers. Probably let's be cautious on the names that we're trying to put out there in our email IDs. Nonetheless, thank you so much for those answers. Very insightful.
I mean, if it was a job applicant, I would probably not conduct an interview. On the client side, I'm not sure.
Makes sense. Makes sense. No, I agree. Well, thank you. Thank you so much. That was so much meaty information from both of you guys. And I can understand. No, it's so much insight, and I feel overwhelmed, honestly, because so many things that needs to be considered. And I think it also reiterates the need for us to have really good data and really good technology to help us decide, right? Like, and I know that Tung is tech driven because we can make mistakes. Even the technology probably could make mistakes, but together with the human thinking and technology we have and the right data that we could get access to, is we can make better decisions and provide loans to people who actually really, really need it. And at the same time, pay us back so that we get business also.
Great. So on to the next segment, shall we?
Yeah. This question is, if you could wave a magic wand and fix one issue in the lending ecosystem in the Philippines, what would it be? So be crazy with your
Ooh. No, I think it's a too tough one. I think there's a quite there's a lot. There's quite a lot. I think the easy one would be to say, so all microfinance institutions in India and also lending companies in Europe and the US, they do have access to, what can you say, credible data from, like, about people, like especially if they've been red flagged, or if they don't have good credit history, they have low credit score and all that. But we just don't have that in the same way here in the Philippines. I would say that's the easy answer. But I also know that, at least with my clients, because we do focus on the micro and the small businesses who are severely underserved and also severely lacking verifiable data points. So they cannot get access to the banks and the formal lenders, meaning that even if we had that system, I think it would be quite difficult for us to use it in, like, it would be very, very helpful for sure. So it's I think it's a very, very tough question to answer, because the financial market in the Philippines is just not that efficient compared to, let's say, Singapore or in Europe. So if we would have access to those kind of financial data that it can be verified, that would help. That would be very, very, very helpful, because right now, I mean, we're building the tech around it. That's great, but it's there's just only so much we can verify and check. Basically, access to credit history across all financial institutions, formal as informal, and also access to financial data on the clients via banks or business accounts, such as wallet services such as Gcash. But it's a very complicated answer. I know that.
okay. It's all right. Yeah, this is the point. Like, it's a really big discussion that we have to always speak about, and hopefully one day it was gonna get fixed little by little. No, hopefully sooner than later.
I think along the same lines of what Casper has shared as well, I think if I had a magic wand, I'd start with really trying to have a more connected, streamlined, standardized data environment, like a network where lenders or really anyone that's looking to use the data for a good purpose can securely access multiple verified data sources through very interoperable systems, because that's two things, right? Sometimes it's verified data sources, regulated even, but then from a technical perspective, from an implementation perspective, there are hurdles. I think it's quite prominent in the industry that there are some challenges, or at least steps that you still need to take on before you can access such data that would demonstrate verified. And then there's also the recency, kind of the refresh of the information. So if the wand could really kind of paint or deliver that kind of data environment where the information just moves seamlessly across institutions. It really helps the financial players collaborate more effectively. In the Philippines, the landscape is still very much fragmented. For example, traditional credit bureaus may pull from the same source or similar sources, but could also produce different outputs. I'm not talking about scores, right? Like just actual raw data could still have some variations. And sometimes we ourselves wonder, like, if it's pulling from the same source, why is it different? Is it timing? Is it because of the recency, etc.? So it's not very standardized. And then we also have alternative data providers that work under different models because of the data that they carry. They're all valuable, but they don't always talk to each other. So if we could align all of those pieces under a consistent and fully implemented regulation plus shared data standards, I think we would unlock a more complete and inclusive view for the lenders of credit worthiness that would benefit everyone, right? It's a win-win for everyone. It's fairer, it's more inclusive, and it's really supporting the underserved. There's quite a lot, but if we were to start somewhere, I think that's the best starting point, and then just kind of expanding from there.
Super. Makes sense. Thank you. Thank you for sharing those wishes, and may the wishes come true. Red, do you want to ask the last question?
Sure. I'm just curious. Let's start with Kitch this time. I want to know if your typical day is a music video, what would the storyline be and what would be your soundtrack?
Okay. So
I
I
see
would
Casper smiling right there.
I mean there's
Prepared.
it's
It's a
probably a
very
whole
Filipino
album,
question,
right?
isn't it?
Probably a whole album that's filled with varied songs. But I think I would choose I'm not sure if you guys are familiar with the song Believer by Imagine Dragons. So first of all, the energy of the song is, of course, very energetic. The vibe gives me kind of, I think it's very much attuned to my life in the sales in general, and I think in the industry of fintech, where I think the song and the energy gives off the nuances of about like the grit, the grind, and the payoff that you have to really exert, right? In a space like ours, where it's again, as I mentioned, very fragmented. There's a lot of hurdles. If you're more familiar with maturer markets, it's quite challenging, and so you really have to kind of embrace that mindset of whether you're doing sales, whether you're a business owner, whether you're trying to enter the Philippine business space, I think there's a lot of pressure points that would fuel to growth, and you just really have to hold on, right? And so, particularly for me in the song Believer, it's not just about closing the deals, as you would know, Red. It's really about turning and converting a lot of our clients and the entire market into believers, right? It's deeper, it's more grounded, and I think the transformation that the song kind of delivers and emits could be something or is something that I think is very relatable to me personally and to anyone who has been into a sales cycle or anyone who has been into a business here in the Philippines.
But I want to know let us visualize how your music video looks like. It's going to be a 3-minute span of music video. I know you mentioned about the hustle, the grind, grit, but how does that look like? Let us help our audiences visualize how that music video would look like.
Wow, that's a tough one. I think I don't really have the visuals, I guess, for now to kind of put that together. But I think any success story, like a lot of the, let's say, the Rocky movies, or what's the movie with the boxing movie of, I forget. But just like a lot of the underdog stories, underdog movies that you see, or underdog films that might always show the transformation. I think that's how I would that would be my peg, right? That would be closer to that, where especially in the startup space, I think when we have a lot of contenders in the market or more established players, I think whether you're the data provider or you're the lender that's trying to establish yourself, there's you're often pushed aside as a small player, right? Sometimes just the fact that you're a new player, you're often kind of pushed aside because there are heavyweights around you. If we can prove the use case and we can show that it's for the total benefit and inclusion of everyone else, then you could be the underdog that actually claims the victory at the end of the day. So that's how I would kind of choose kind of selling these solutions that people have never heard of, or maybe data that like I would never use that because I have traditional data. I have my CASA data if I'm a bank. So just being able to convert and see like at the end of the day, this information, this data point, when put together, can actually help everyone win, not just me, but the business and the consumer, then I think it's a very uplifting kind of visual.
I think
It's
the
a
movie was
storyline.
like Million Dollar Baby. Million Dollar
Yeah.
Baby.
No, I'm thinking of, yeah, I will think about it. I'll let Casper speak, but I'll think of the movie that I was trying to think of.
Rocky's totally revealing of our age, okay? So please.
I don't know. Looking for the other boxing movie. I forget his name. The one of Michael B. Jordan. Anyway. Yeah.
I'm not very surprised that we got this question. Actually, it's such a Filipino kind of question, isn't it? Everything can be related to some sort of music, right? And since I'm not Filipino, this question is very tough. But the way I see it is music video. The only thing that really comes to mind, right, is a music video. Was it a music video about my typical day? Okay. Yeah. Okay. The only thing that really pops up is, I mean, running a startup. It's basically, if we're really boiling down what it is, it's just we're basically just organizing chaos. And maybe my title is not CEO, but more as a chief chaos organizer, right? So I keep seeing us. When you talk to startup founders or just generally hear about startup, oh yeah, startup is like a roller coaster. It's up and downs, and I call that completely bullshit. Sorry, excuse my language. I call that's not valid. That's not very representative of a startup, because a roller coaster, the tracks are already laid, so you kind of know what you're gonna get. And in a startup, and especially when you run a startup, you take things out of thin air and then you try to build it up, right? Like you're trying to organize all the chaos around you, right? So in a music video, it's more like, okay, we are submarine stuck at the bottom of the ocean somewhere. It's completely dark, and we need to find our way to the shore and make sure that we don't drown or run out of oxygen on the way, right? So in terms of music track to that a music video, it's maybe Queen with "Don't Stop Me Now." Because every time something breaks, we fix it, we scale it, and we basically just keep on going, keep on grinding, right? Yeah, I think that's the best I could come up with in regards to a music video. I don't know, complete chaos, but it's kind of organized, and we kind of know where to go, but things are still very dark around us, But we will get there one day.
I see the vision. It's giving me The Life of Pi, if you've seen that.
Yeah.
Such an inspirational movie. But yeah, I see the vision.
Sorry, Red.
Yeah.
I'm just gonna chime in. I remember the movie now. I was talking about the Creed movies, the Creed boxing movies. Like it's a trilogy, I think, as of this date. So just like the hustle and having to live up to certain legacies. I think it's just that success story is something that I feel like would resonate with. And maybe Casper can too, if you've seen it.
I like how both stories are hinged to quote unquote self-made, the rise from the ground, achieving success. Well, we have different versions and perception of success, but still we're headed towards a common goal right up there. Elaine?
Super relate. I just really want to thank Kitch and Casper. We took so much of your time, but I also learned so much and hearing all your feedback, your experiences, the quirks. So really thank you. And yeah, that's it. And we hope to speak to you again soon, like in this setup or offline.
Yes, of course. Thank you. Thank you for having me.
Thank
And
you,
thank you for
guys.
having us. Also great exchanging ideas with you, Casper.
Absolutely fantastic. Thank you so much, guys. It was an absolute pleasure. See you guys.
Thank you, Casper.